Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and I am honored to be joined by the man, the myth, the legend, Lou Kerner, founder of Just Stable and a stablecoin analyst for quantum economics. Lou, thanks so much for joining us.
Yonah, great to be here.
Now, Lou, the beauty of this industry that we work in is that it changes so rapidly. Last time we spoke, which I think it was like 2 or 3 months ago, a whole lot has changed since then. Not just price, but also innovation and products. So let's jump right into it. Last, when we met, DeFi, huge, was blowing up. Yield farming was all the rage. And there was this, it was kind of the start of this phenomena of reward programs for liquidity providers. Pretty much all these DeFi protocols, they wanted liquidity on their protocol, and so they were giving away tokens and to liquidity providers. The big news recently in the field is that UniSwap actually ended that reward program, and what we saw was that immediately they lost half their liquidity. All the LPs took their liquidity, seemingly most to SushiSwap. But what is your take there on this idea that that seemingly even the gold standard of the DEX community, UniSwap, couldn't hold on really to its liquidity once it got rid of that reward program?
Well, so you're obviously going to have what you would call hot money, which is, they're going after whatever the highest reported APY might be. I think the real story, I think it's totally expected that when the yield farming rewards ended, you'd see a dramatic drop off in the amount of assets locked. But I think the real story isn't that you saw that, but that you saw the price of sushi. I'm sorry, the price of UniSwap go up, because in fact, the UniSwap holders were paying a lot of money to have that liquidity, and they appear to be happier not having that inflation in the token and not having those assets locked, which they know are going to leave as soon as they stop giving them the free money.
Yeah, and I think that is a crucial point to note, that it's the thing that's kept me out of investing in any of these governance tokens, is because these protocols with these reward programs have been giving them out by the millions for free by the day. I mean, like, what am I going to do buying a handful with my own money when these liquidity providers are, pretty much these governance tokens are being flooded on the market for these reward programs? So at the end of the day, which strategy do you think is the smartest for these protocols, or like most things, is the answer somewhere in the middle?
I don't think we know the answer yet. I think what we can know is you look at UniSwap, and in fact, they do have a tremendous still amount of value locked. Obviously, they're still one of the top assets under management, if you look at it like that. And now that those people aren't going to go away tomorrow because they're dropping their reward program. They're there because of all the other value that they're getting from UniSwap. And at the end of the day, we've got to give the users value. We can give it in different ways. If we give it in rewards, when you stop those rewards, the people who are there for the rewards are going to leave. So the question is, and I think it's been an interesting strategy for kickstarting assets locked and getting that scale that you need then to attract the other assets. But the question is, how do you build long-term value? And I still think that we're in the very, very early days of doing that, but it certainly appears as though UniSwap is doing that.
Yeah, and because we're so early on, it's seemingly every new update or new development, you kind of don't know what's going to happen, and then we're learning as we go along. So I think that one end is to look at what UniSwap did. On the other hand, we see with SushiSwap, this is the second time they've successfully vampired a lot of liquidity from UniSwap. The first time by actually being the first to offer that governance token and those LP rewards, and then UniSwap copied them there. And then now once UniSwap canceled or stopped the reward program, SushiSwap actually went after those 4 pools, because there was only 4 liquidity pools that were actually being rewarded on UniSwap. And SushiSwap, they're not embarrassed. They are as open as possible, saying we are trying to get liquidity from UniSwap. Hey, all you Uni LPs, come to us. We're going to provide reward there. So I think this now shows another avenue. There is a business model here in the copy paste ad feature, or copy paste and just do a different choice than the competitor. Is SushiSwap a serious contender here, or will they always just be following UniSwap's lead?
Well, I think the question is can SushiSwap actually bring innovation that's going to drive the industry forward and give value to their users so they continue to build their asset base. And there's still such early days, and so tons of room for innovation. I think one of the most exciting things I've seen over the last number of weeks is Bancor's insurance for impermanent loss. And so, Bancor actually, also started enabling single-sided, so you can go lock the assets up and you don't have to have two assets, but you can just put up one asset. You can put up your chain link, and then they'll mint additional BNT for the other side. And if you have an impermanent loss, you'll get rewarded with more BNT. And I think it's a super interesting strategy. Right now it's got a super high APY. They're building assets. And again, I think A, I've been a fan of Bancor's for a long time, but B, it just goes to show where we are in terms of new innovation. There's still, I think, a massive blue ocean for that.
Mm-hmm. Yeah, it's crazy, the rate of innovation, and everyone keeps on one-upping each other and trying new things, and that's what's really exciting. And I think that one of the things that drives and enables that innovation is that there's not too much. There's a lot of money here, but there's not too much assets locked. Because I think if you look at Ethereum, they're kind of hamstrung by the fact that they have so much assets locked on their network that they're scared to rush to ETH 2.0. They're scared to really make changes, to really innovate, because there's so much money on the line. And the beauty here with DeFi is that even though, yes, we are growing and it is getting some assets, it still is a low enough number that people aren't afraid to necessarily try new things and maybe make some mistakes along the way.
We're certainly seeing a lot of, for lack of a better word, I'll call them, other people call them hacks. I would call them plane crashes, where we learn, as this is all composable and put these pieces together, particularly around the oracles and how the oracles work. We're seeing a lot of exploits, and every exploit, whether we lose 5 million or 10 million or 20 million, that's a lot of money. Obviously, very painful to the people who are part of that plane crash. But the good news is that to date, at least, none of them have had a material impact on the enthusiasm of the market. The market knows these plane crashes are going to happen. They know that that when they happen too, that everybody learns from that, and hopefully we don't have that particular plane crash again. And like, in the early days of plane flight, there were lots of plane crashes. Today, we've largely solved for all of them. And now, there's never a large plane crash. Like literally years can go by in between large plane crashes because we've solved for them all. And I'm sure that's the path we're on with DeFi.
Mm-hmm. And then in like the silver lining, besides just learning from our mistakes on these plane crashes, on these flash loan exploits, and these exploitation of this oracle manipulation, is also on the other side. You mentioned this with the insurance, this idea of DeFi insurance. I know the pickle hack was covered by some sort of DeFi insurance, and so for that last use case of DeFi that hasn't really got its chance to shine, I think has the ability to shine now because of these hacks. And then if they actually cover, I think this actually builds a lot of confidence, in these insurance models and in these insurance coverages, and then that strengthens the actual DeFi products themselves, because if you know that you're covered, if you know your insurance, there'll be less fear. So do you think that has played out well? Have any of these have you seen like either with Bancor or with the pickle hack or any of these others, where any of these DeFi insurances have actually paid out?
No, we've seen Nexus Mutual pay out. They have the most assets under management, the most assets locked, the most assets that are there ready to pay off in the event of the hacks. So I think you're exactly right. I think we're building that infrastructure day by day, step by step. 2 steps forward, 1 step back, like we're getting a big pullback, today. But we've had a huge run up. So pullbacks are all part of it. I joke I have a word that I use to describe the tendency of markets to become bubbles and crash and become bubbles again, and I call that capitalism. And that's largely what we do. We just go from side to side, and every time we're like, oh my god, oh my god, oh my god. And I think we were in a large, a long crypto winter bear market crash. And now the pendulum is swinging to the other side. It doesn't go in one direction the whole time, but it's hard to imagine that in 6-12 months we're not going to be markedly higher than we are today.
And that definitely is the trajectory that we've been facing. Today, though, there has been a little bit of a pullback. We went down to 16 something, and now I think at this point, last I checked, in the 4 minutes since we started this interview, we were at 17 something. We could be at $2. We could be at $50,000. I don't know, but where do you see this bull run running at this point?
One of the interesting statistics to look at, going back, and I'm not really a chartist or a technical analyst, but if you just want to get some sense, bottom to top, for the last 3 times we've crashed and peaked and crashed, the last 3 have been in excess of 100x from the bottom. So that would be more than 300,000 on Bitcoin.
Wow. Well, that sounds good to me. I would love if that happens. And a lot of people are attributing this latest, the push that kickstarted this all was to a combination of PayPal giving exposure to crypto. They're not giving the actual crypto, but exposure to crypto, pretty much a ETF, if you would. On top of that, you have publicly traded companies like MicroStrategy with Michael Saylor publicly for the first time putting some cash reserves into it. And the craziest thing about that MicroStrategy story is I saw a report that in the time since they put, I think it was 10% of their cash reserves into Bitcoin, they made more money just off the appreciation in Bitcoin since then than the entire MicroStrategy business has made in the past 3 years. And I mean, that's insane. That really blows my mind.
Yeah, it's certainly interesting, right, that you have a public company putting money into Bitcoin. On the way up, obviously, Michael looks like a genius. And by the way, he's doing MicroStrategy, and Michael Saylor is doing a lot more than just buying it. They're talking about it. They're building a lot of assets on MicroStrategy to educate the market about it. They are running Bitcoin nodes. They're really helping to push the industry forward. And that, to me, is even the much bigger story than using their treasury to buy Bitcoin. Because, when on the way up, they're going to look like geniuses. On the way down, they're going to get fired. If people want their money in Bitcoin, they can go buy Bitcoin. They're buying MicroStrategy to get exposure to Bitcoin. It certainly created a lot of excitement for MicroStrategy again on the way up. And I think that they're going to make a lot of money on Bitcoin. But that's just one of an infinite number of things. Like you said, PayPal, we're getting just more and more and more on-ramps. It's getting easier and easier for people to buy it. Grayscale just announced they passed 10 billion in assets, which is awesome. That's the easiest way to buy Bitcoin today for most people, is just to buy GBTC, publicly traded. So, the world, every day, again, more people become aware of it, more people invest. Doesn't mean it's going up, but hard to imagine, again, 12 months, 24 months, 36 months, that we're not going to be markedly higher than we are today. That's just the history of Bitcoin.
And it's really these building blocks, like you mentioned. We started off, with Satoshi's white paper, and it started off as just, whoever was interested would just on their computer mine this digital currency. And it's so grown, especially with the growth of the different blockchains and the smart contracts. And these things pile on each other. And now if you want Bitcoin exposure, like you said, you could even get it through a publicly traded company. And so it's growing and growing. And one of the things that you really are into, and you've been shouting about for a long time now, ever since I've known you, is stablecoins.
Yeah.
And so right now, we've spoken about Bitcoin, we've spoken about many things. What's exciting right now happening in the stablecoin space?
What we're seeing is a whole bunch of companies emerging that are more stablecoin platforms, both helping other people create stablecoins and also actually having uses for them. So enabling merchants not only to accept Bitcoin, which people have talked a lot about, but I think one of the more interesting things that I've read about just over again the last few weeks is poker sites now are not only letting people pay with Bitcoin, but they're letting people take out when they take their cash out in Bitcoin. And so they're seeing a lot of people that's been growing very rapidly. So, letting people spend their Bitcoin is nice, but one of the weird things is most merchants, when they get it, they immediately sell it. So in fact, using Bitcoin to purchase something actually in a lot of ways creates downward pressure on Bitcoin price. But letting people access Bitcoin and having more on-ramps to Bitcoin so more people get it, like these poker sites, that just adds and adds and adds to the Bitcoin value.
I'm surprised they weren't accepting Bitcoin until now. It seems like a perfect fit there. Again,
yeah, no, some were, but it's letting them get out, letting them take the Bitcoin out. That's new.
Well, look at that. Poker sites are actually giving more functionality than PayPal. PayPal does not let you take it out. So PayPal could learn a thing or two from these poker sites.
That's funny.
So, right now you're based in America right now, and America just seen the ending of elections, or what we think is the ending of elections. And there was a lot of, it was a contentious election, as most elections are. But here, the contention wasn't really on the candidates, but more so on the election itself. And this is something, once again, brought to the forefront, this idea of using the blockchain to vote. And seemingly, most blockchain voting systems would work, as everyone's given a coin, and they send it to whatever candidate address that would be. What do you think? Would that actually be a future that we could see? Do you think that blockchain voting is a reality that could happen?
Sure, it's part of the larger story, right, of us getting our identity, right? It has to really all start with our identity and us, having an identity on the blockchain, or a number of blockchains, such that we can have our life and carry on our life with the privacy that we want, with our data being ours, and we can let people have it if we want. With zero knowledge proof, we can use it to prove what we want without actually showing people anything. I'm incredibly excited, right, about having my own medical data, right? Our medical records are all over the place, right? I should have all my medical records and be able to share it with people when I want to share it with people, and not how it works today. So, voting is coming. I mean, I think the impact of crypto will look in 20 years, 25 years, I believe will be massively bigger than the impact of the internet has been over the last 25 years. And the impact there has been pretty big.
Wow. Well, that would be incredible to see. And judging from what you've been telling to me in the past and the predictions you've made, I'm going to side with you here. You've nailed it so far. But yeah, this idea of health data, and a lot of people don't realize, not even just the data that you have between you and the doctor, which is covered by certain protections, but now as we're wearing more wearables, the Apple Watch and the smart devices, and as things become more connected, this Internet of Things, that isn't covered under law by any protection, any of that data that you have, and they're becoming more and more sophisticated. I don't think a lot of people realize that data is not protected, and this is a really wonderful use case for blockchain, like you mentioned, having this not only protecting your data, but empowering you to monetize it and use it as you want.
Yeah, and with one of the craziest things is people who want to get their ancestry.com, right? So you can go and you send them a swath of your DNA, and then they give you your genealogical history. Okay, that sounds nice, but it turns out what their real business is selling your DNA and selling your genome. And now, if you send it into one of these things, by the way, who has access to it is the police. So now if there's a murder and they have some swath, they can actually are now finding, murderers from the DNA from, Ancestry.com and these other sites, and not even the people who are necessarily committing them, but if your brother committed a murder, and you put your thing in, they can find your brother. So it really is Big Brother in a lot of ways, and 99.9% of the world doesn't care about it, hasn't cared about it. Who knows if they ever will care about it? It tends to be one of those things that you don't care about it until you have a reason to. But certainly for people like me, and my guess is you, we want our data private because we know all the malicious ways that it can be used.
And it seems like finally the government is also getting, I want to say, a bit on board. We have different motivations, but with this, the antitrust trials against the big tech companies, I think their motivation, the government, is that they don't like that these private companies are having too much power, probably more power than them, and also making a lot of money. I think that's the issue there. But whatever the motivations, it does seem to be matching up. They're putting antitrust trials against Google, with how they pretty much have monopoly over the search engine and much of the data on the internet, as well as Facebook. I mean, as we know, you were early on in Facebook. You were turned down by Mark, but you were going to get in very early. And do you see, with this increased scrutiny against big tech companies that wasn't really present, looking back a couple of years ago? If you would ask people 5 years ago about Facebook, they'd have very positive things to say. And I think that's true with a lot of the tech companies. And I think that public sentiment, since probably 2016 elections, when people started realizing the power and influence that these companies have over us and over public opinion, I think that public sentiment really has swifted to more scrutiny against these companies. Do you think that this is now the opportunity, and the hole is being created, where if a good project, if a good blockchain project comes together and puts together a decentralized competitor that really lets you control your data, is this now the time?
I'd like to think so, but I don't think so. It certainly in the United States, what's interesting about how our monopoly laws are written, our antitrust laws are written, it's focused on damage to the consumer, hurting the consumer. And by the way, largely economic pain to the consumer. So, they broke up the railroads because, the railroads were charging through their monopolistic practice more and more money to the people who were getting on the train or sending stuff via train. And the same thing with the telephone company. They were charging more and more money, and so the government broke them up because they were hurting consumers. Consumers are actually being helped, not hurt, by Amazon, right? Google's not charging the consumers anything; they're just giving them more and more value, right? Facebook isn't charging consumers anything; they're just giving them more and more value. So our laws are not written to combat the problem, which is they're anti-competitive. So they're hurting the competitors. And so we're not getting the innovation that we might otherwise get. I think it's equally bad for society, but we don't have laws to help us. And by the way, most consumers, I don't think, care, right? Facebook has a lot of privacy things that you can use, that you can turn on. And 0.0000001% of the people use it. Like, they have 2 billion people and 5 people have used, made it more private. I mean, it really rounds to zero. So if you ask people, do they care about privacy? People will say, yes, they care about privacy. Privacy is really important. If you ask people, will you spend a cent to get massively more private? No, it's not worth it to me, right? And that's where we are today. And by the way, it's not, the government tends to care about what the people care about. And because the people don't care about it, I think it speaks at a time to the base, right? You can say, tell the base, we're getting, it's all rigged, right? That's Trump's thing. Everything's rigged, right? The voting's rigged, social media is rigged. But if you actually take a look at the stats, all of the vast majority of the most engaged with content on Facebook is Republican, conservative. And by the way, by a wide margin, the most clicked on stuff on Facebook is fake news. That's what people want to read. So all Facebook is doing is giving people what they want. I liken it to what the Sackler family did, pursue pharmaceuticals, opiates, right? They just gave people what they want, and it turns out that, people want often stuff that's really, really, really bad for them.
Yeah, that's for sure, especially with the opioid crisis and the Purdue Farm. But if we're already talking about the elections and the politics, what effect, if any, do you think that the upcoming Biden presidency is going to have on Bitcoin and crypto and blockchain overall? Especially, there's talk of Andrew Yang being involved high up in the administration, as well as Gary Gensler. So it seemed like the Trump administration, as much as they could, was pretty, at least on Twitter, pretty anti crypto. What effect do you think a Biden presidency will have?
It's a great question. I think at a very macro level, we're going to see a continuation of massive amount of Fed printing. And I think ultimately that's what Bitcoin is solving, right? It gives us something that doesn't have that kind of inflation, which, ultimately we know with certainty that the dollar is going to go to zero. We don't know whether it's today, tomorrow, 100 years, nobody knows, but that's where every currency goes, because they print, they print, they print. And we have all of this debt. We're the only people buying our debt today. We print money, we make, because we're not paying an interest rate. So I think we're just, and by the way, that's all Trump did, was print and print and print. So to a large degree, I think the biggest thing impacting crypto, and certainly Bitcoin, isn't going to change, and I think is highly favorable. In terms of the laws, they've shown to move very, very slowly in the US, and I wouldn't imagine that that's going to change under Biden.
And the thing that really kickstarted, the government's been printing money for forever now, but it's really been kicked into high gear because of the COVID pandemic. And now with the announcement of a couple of vaccines having pretty successful trials, it seems to be, the general consensus seems to be that at least there's a light at the end of the tunnel. Well, no one knows when. Obviously, on the other hand, we could all turn into zombies on this quickly developed vaccine. But assuming there isn't a zombie apocalypse on the horizon, and assuming that, that they're going to get an emergency FDA approval, they're going to start pumping out vaccines by December, and obviously it's going to take time to vaccinate everyone and get everyone to accept a vaccination and to reach that herd point. But regardless, whether it be a year, 5 years, 10 years, there is a light at the end of the tunnel. And when that happens, are governments going to take their finger off the printer button, or are they going to be like, wait a second, we still have all this power to print and pay for whatever we want, and this won't change anything?
Well, I think when, we are still in a massive recession / depression globally. And what the pandemic has done from an economic standpoint is it just accelerated a bunch of stuff that was already happening, right? The movement of e-commerce, right? Taking a larger share from bricks and mortars. We literally, right? People say we got 10 years in 3 months, 10 years of growth, literally. And so there's now massive dislocation. That's great if you're an Amazon shareholder. So there's a tiny percentage of the population that's actually really good for. But for the vast majority of the population, it's devastating. And so the governments are going to have to come in and help all of those people, tens of millions, hundreds of millions of people, who are now dislocated from, what's happened. And that's going to take massive amounts of printing. If you don't want to have prolonged recessions / depressions, whether it's here in the United States or elsewhere.
So far, what the U.S. government did in terms of helping on an individual level, not on the corporate level, but on the individual level, they mailed a check of $1,200 to every citizen. And what some people did was they used that to buy Bitcoin, and those who did turned that $1,200 into a whole lot more. But I wonder what the effect would have been if the government would have said, instead of sending a check for $1,200, we're actually going to send 1,000 Satoshis to every single U.S. citizen. I imagine that, in effect, that would have also driven up the value of Bitcoin tremendously, and it would have solved all the government's problems. They wouldn't have had to print out any extra fiat, and the money that would cost them to give it to the citizens, that would have tripled or quadrupled immediately. How long is it going to take for governments to realize how valuable and how much more valuable it is to put their the governments used to have reserved gold backing the dollars, and they don't anymore. Nothing backs the dollars, and so I'm just waiting for that first country, and it's probably going to be a small country. It's like the Maltas and the Seychelles that they're always the first to adopt. When is some country going to say, listen, our currency keeps on being valued crazy? A lot of countries, what they do is they peg their currency to the US dollar. When is that first country going to peg their currency to the price of Bitcoin?
Well, I think the interim step is obviously central bank digital currencies. So I think the first step they have to do is digitize their own currency before they start looking at getting into Bitcoin. And China certainly seems to be far ahead of other major countries in terms of deploying CBDC. And it seems to me that as the Chinese yuan becomes more functional, that the dollar's uses as the global currency reserve is going to ebb, and that's going to be devastating for the dollar. If you take a look at the price of the dollar relative to other currencies, it's at a multi-year low and potentially heading much lower.
Mm-hmm. Yeah, that's the end is nigh, as they like to say. So for you, I mean, even if you didn't believe necessarily in a whole ecosystem developing around blockchain, around Bitcoin, which it is, and all the DeFi, if it was merely just a hedge against the US dollar, what percentage of one's income would you say is a fair amount to, just merely as a hedge against inflation and against the devaluation of the dollar? Because any solid portfolio, any solid savings should be varied. You don't want to have all your eggs in one basket, and the dollar is a basket. The dollar, people don't realize, isn't just the standard. It does fluctuate, it does change. So shouldn't people who don't believe in this whole ecosystem still be putting their money into Bitcoin merely as a hedge?
Sure. Obviously, you're preaching to the choir. Can Bitcoin still go to zero? Sure. Is Bitcoin still highly risky? Sure. Is Bitcoin still really volatile? Sure. So I don't think people should put 50% of their wealth. But I think if you want to be aggressive in terms of diversifying your portfolio and really having this insurance, I think putting 10% of your portfolio in Bitcoin makes a lot of sense. And even if it does go to zero, that would be horrible. Obviously, you don't want to lose 10%. But I think the risk reward, right? It's an asymmetric bet. You can only lose 100%. But what else are most people invested in that can go up 10x, 50x, 100x, and really provide them, with the insurance that they can't get anywhere else.
Mm-hmm. Yeah, and I think one of the beauties of Bitcoin, the thing that makes it so special, is that it's limited, it's capped in supply. You're going to get 21 million, and that's it. You're not getting any more. We know the schedule of the release, essentially till the end of Bitcoin mining. But I think a really underrated value in this equation is the fact that Bitcoin lost is never getting back either. So not only is the supply fixed, supply actually goes down. I mean, and especially now as mom and pops are FOMOing in as the price goes up, they don't know how to take care of their private keys. They're sending it to the wrong address. And so obviously once the ecosystem gets valuable enough, there will be solutions, and probably the amount of Bitcoin lost will get less and less. But this is a number. The supply is actually going down. It's not fixed.
Yeah, I think you're right. Look, this is the ultimate market, similar to gold, right? That there's, at least gold you can make jewelry out of, right?
Mm-hmm.
So all this is, the price is just supply and demand. And you're right. I think the supply is probably lower than most people think that it is. And we have rising demand. It feels like gravity. It feels like this is happening every day. I've been crypto 24/7, 3.5 years. And every day for 3.5 years, I've gotten more confident, that this is the future, that it's going to be, dramatically higher than it is today. And we'll look back on these days and go, wow, it was so early. Remember when Bitcoin was only 20,000? Hopefully it'll change the world, right? The world needs some changing.
Yeah, and I'm glad to be along for the ride.
Exactly.
Because that's the thing, is that a lot of people, like I kind of don't want the whole world to get on board yet. I kind of want to be able to accumulate some more and then let everyone in on the party. But yeah, it is good fun. And when we're looking at price volatility, when Bitcoin is price correcting, or if we just want to be a little safer with a certain part of our assets, stable coins offer that. Stable coins allow you to kind of ride out price volatility or dips in the market or whatever, instead of having to cash it out back to fiat. So for those who actually want to use a stable coin as that, a little safe island in the meantime, or just as a middle ground between two different currencies, which stable coin would you say is the least risky in terms of it not going to shit?
Sure. Probably USDC, in terms of, it's fully audited. So that the money is there in the bank. So now the downside is obviously the government can go take that money because, they know where it is. They can't get to Dai. That said, a lot of the assets now that are in Dai, are centralized. Every stable coin has pluses and minuses to it. The interesting thing about Tether, while it's not fully backed, it's certainly the most liquid. It's kept very, very close to its peg. And at the end of the day, right, nothing backs the dollar. And nobody's buying Tether to take it to the bank and get $1 for it. People are using Tether under the belief that the next guy will accept it for $1 as well. And that's, and I think that'll work until there's a compelling reason for it not to work. Even while we're getting all these new stable coins coming to market now, and a lot of them are I think, super interesting. Things like Frax, is coming out, one of the first one, that will lower the percentage of reserves over time. So we're starting to see some experimentations around there. But even with all these new things coming out, actually Tether over the last couple months has actually been increasing their dominant share. Even while USDC has also been growing rapidly, and Binance has been growing rapidly, but not as fast as Tether.
And one of the other interesting projects is Ampleforth. I believe that's the one that literally adjusts the supply in all wallets simultaneously, and that's pegged, interesting, to the 2019 price of the US dollar. So as opposed to the USDC, which is pegged to the dollar, but the dollar could go to shit. Actually, Ampleforth, I believe, is pegged to 2019 dollars. So even in itself is a hedge against the inflation of the US dollar.
Yeah, I mean, Ampleforth is a super interesting experiment. They don't actually consider themselves to be a stable coin. It's just an algorithm that either mints more Ampleforth or decreases the amount of Ampleforth every day based on where the price is relative to that 2019 plus inflation. I mean, they call it a peg, but it's really, it's not something that they're trying to get it there. It's just that they've created an ecosystem to add or subtract based on where they are relative to that. It's a nuanced difference. But the only way we learn is by experiments like Ampleforth. So I'm a huge fan of those, all those experiments.
And you mentioned that Dai is more centralized or kept, it's pretty much accumulated in more centralized places than you would like. One, you want to explain a little bit how so? And two, does that really disappoint you? Because I know that you were a Maker fan for a long time now.
Yeah, no, I'm just saying that to the degree that they're allowing centralized assets to be used to create Dai, that's now becoming a different thing. And I'm not saying that that's not a great thing, right? Being able to take real world assets, like invoices, right? And Centrifuge is this great company, right? So they have all of these invoices, and they can now be used to mint Dai and actually give a return, an interest rate, but those invoices, and that money, are centralized, so that creates risk that Dai didn't have originally when all you could use was Ether.
Yeah, and I mean, Ether and especially Ethereum is what's really underpinning the vast majority of the DeFi market, and that's kind of been the big headline. I guess it was last week. Was the launch of the Ethereum 2.0 staking contract, kind of the big step with the Beacon chain going to be launching soon now. It's going to be the big step towards E2.0 that we've really been waiting for so long in this space. And there was a big discussion there because it required a certain amount of Ether to be staked in that contract in order to launch. And there was this debate over, should anyone actually stake their Ether there? Because what came out was you wouldn't be able to actually move that for a year and a half to 2 years until the actual full functionality launches. And like this question was, why would anyone stake their Ether there when either A, you could get higher returns with higher rewards, higher risk, of course, but higher returns elsewhere, or you could, get steady returns elsewhere, but keep your ETH more liquid. So in your eyes, is there any reason to stake your ETH in that contract other than, hey, ideologically, I just want to support ETH 2.0?
Well, right. If you take, right, this is all community. I think community is what's at the center of all of this. And so, as a member of the community, by staking some portion of your ETH, you are hopefully then increasing the value of all of the other ETH. So even if on that ETH you might not be making a return, if you look at it on a more macro basis on your total holdings, it can actually really be a smart investment as a member of a community. Can you take advantage of being a free rider? Sure. And there are lots of free riders, and that's a problem that, that every community has. But if you have enough community members, which apparently we do, who feel comfortable giving a percentage and staking it to move the community forward, then you have, the progress that we've been seeing.
Have you personally staked any ETH on the contract?
To tell the truth, I am in the process of finalizing my divorce. The trial is over, and that has hampered my ability to move assets around without, because I need my ex's approval.
Wow.
So I am looking forward to getting massively more active than I have been. Hopefully we'll be getting something back from the court any day.
Well, crypto markets, watch out, because Lou Kerner is about to get on the scene. Very exciting.
Exactly. And by the way, right, I mean, that's my own personal experience. I got served 4 months before I saw the crypto light in June of 2017. And so, did it help me see the crypto light? Did it open my mind up a little bit? Because, I'd been working literally, for 30 years, and building out a series of assets and bank accounts and blah, 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 like, most, people. And one day I woke up and, my wife served me. I didn't blame her for wanting a divorce, but it wasn't a great marriage, like lots of marriages. But she was able to basically lock up all of my assets.
Well, Well,
because they were all
for those,
centralized.
yeah,
So
for those who are,
not your dollars, not your keys, not your dollars either.
exactly. And I think that, that's a lesson you learned firsthand. And
Yeah.
for those who are complaining or worried about their ETH being locked up for a year and a half because of the contract, try getting served for divorce and not being able to move those assets either. So yeah, may that be a lesson for all of us. And yeah, just another great use case for crypto for those who want it. Yeah. So Lou, the last question before I let you go. There's a lot of exciting things happening now with Price, with different projects. What's the thing you're looking forward to the most as this 2020 winds down? What's the thing you're most excited for in the space in 2021?
Yeah, I just think it's, I'm looking at it more, it's step by step, it's gravity. This is happening. I just get most excited by the innovation that I'm seeing every day across tons of projects, about the community. That's what, again, I get most excited about. That's why I became a big bull on Ethereum early this year when I went to ETH Denver. And I really was able to feel for the first time the strengths of the Ethereum community. It's an asset that nobody has. That's why I'm a big fan of Tezos. The Tezos community, it's you can't say it really in the same breath as Ethereum. Ethereum is really unique, but the Tezos community is really, really strong. And again, innovating at scale. And so those are the things that really get me excited.
Well, Lou, I'm excited for the next time I'm going to speak to you because it's always a pleasure. So Lou Kerner, thank you so much for taking the time and once again, giving us your thoughts on the scene, on the crypto sphere. And for all our viewers here at Reimagine 2020, I'm Yonah Hochhauser. Happy holidays.